Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, we are continuing our back to school series, and we're going to focus on nonprofits this week. So, we're going to discuss 5 things nonprofits should know. So, today we're going to discuss the number one thing nonprofits need to understand, and that is cash. Nonprofits, we have to monitor cash. A lot of times we focus on the P&L, but as we know, usually what happens, we get in this crunch and we're like, we don't have enough for payroll. There's not enough donations coming through. What is going on? This is why it's so important for nonprofits, similar to small businesses, to estimate cash. They need a cash flow. So, nonprofits, number one, monitor the cash coming in and out. So, for my nonprofit clients, I have a weekly cash flow template. Very simple. It lists the bank accounts, their balances, what is going to be expected to come in. That is regarding donations and grants. And then the second piece, we look at bills, what actually needs to go out. And then we estimate at the end of the spreadsheet actual cash. So that way we're being proactive. So, number one, beginning of the week, monitor your cash. Number two, important to forecast cash because with nonprofits, we rely so much on grants. And as we know, there's some grants that give you the money up front, or you have to pay those expenses up front. I should say those grants are reimbursable, so that nonprofits have to pay those expenses and then they have to send in a report. This is so important that nonprofits monitor cash, particularly for grants that are reimbursable. You need to ensure that you have enough funds to cover those programming expenses until you get that reimbursement. So that's why it's so important to monitor cash. Number three, this goes along to number two, expense management. I call this expense management. You want to be managing your expenses along with your donations and grants. So let me give you an example. If you know that more of your donations come in the beginning of the month, then you know that, okay, I can pay more bills at the beginning of the month. So this is where you want to negotiate with your vendors if you're able to about, okay, can I do net 30? Can I do net 15? Whatever the case may be, and align those due dates when actual cash is going to come in. So nonprofits, similar to small businesses, you have to monitor cash. A lot of nonprofits operate on a cash basis for the most part, but even the larger nonprofits, you still want to monitor cash because if you're on that accrual basis, yes, you may create pledges, you're creating invoices. But as we said last week with small businesses, when you create those pledges, that's not actual cash. So you want to be running your nonprofit on a cash basis internally, if that makes sense. So nonprofits, once again, monitor cash, once again, because you have your donations and you also have your grants that you're relying on. And sometimes maybe there's a delay on receiving that grant money or donations are down. So this is why it's important to be proactive and monitor cash. So homework for this week for nonprofits, make sure you're monitoring your bank accounts. Also monitor your CRM. So that could be your Bloomerang, whatever I should say, accepts your donation. So that could be PayPal, that could be Stripe. Similar to small businesses, you also want to check those accounts. So you want to check your bank account, your credit card account, your Stripe, your PayPal, any other accounts that are tied to the bank account, any other account that ties to cash. You want to go in and ask yourself, okay, does everything look reasonable? So that's your homework for this week. Make sure you tune in all this week, and we're going to be discussing 5 things nonprofits should know about nonprofit finance. Make sure you like, comment, and share, and I'll see you tomorrow. Take care.